William, on the other side of this market, of course, is the developers. Most of them were in trouble or have been in trouble. For example, they basically set up a white list, so-called white list. Developers who are inside this white list, and then they have, let's say, more room in terms of credit, get easier credit to finish their housing projects. And of course, this a bit earlier than that, the authorities also basically requested to expand the whitelist to cover more developers compliant real estate projects. So, what kind of effects do you think that will have? Basically, what kind of role it will play to bring back, healthy, let's say, growth for this sector?
That's one of the most important and fundamental parts of the reforms that I've heard that really will do something to address the excess capacity in the real estate property market, because making sure that the flats and apartments and houses that people have already paid for are actually built will go a long way to restoring confidence that the wealth that they have decided to invest in actually will be there. And I think the pre-sale model that has been used so far by so many of these developers shows that huge vulnerability where people have paid or have indebted themselves, and yet they have no asset to show afterwards. So the whitelist and expanding that whitelist is, I think, a very important fundamental part of the reforms that are put in place to try to bolster confidence that wealth in property market will actually be there and will show up as actual ownership. I think in terms of the nature of the reforms that have been put in place, Professor Zhu and Jan have talked about very important aspects of the reforms, but a lot, at least from the Western perspective, it's almost like putting a Band-Aid and giving an aspirin to a cancer victim. It really doesn't address the fundamental reasons why there's so much excess capacity. Having lived through the asset market bubbles in the United States and in 2008 and in Japan before that, the amount of adjustment that has to take place to bring prices back down to any kind of equilibrium level hasn't even begun, I think, in China. And I think the measures that have been put in place are really, just icing on the cake and really have to address the fundamental issue of excess capacity, not in the primary cities, but in the secondary cities. And tertiary cities. Those are, I think, places where people have bought a lot of property, and now they feel that they've lost it. And that wealth loss, I think, is one of the big drags on the Chinese economy right now.
William, talk more about that. You mentioned about the U.S., the housing bubble, Japanese bubble over there, early 2000, and then, the Japanese one lasted, 20 years about. So you say the Chinese sector, this is just probably the beginning, and you see the bubble is still there, or are we going to see the price has to go down to a more solid foundation? Or the government purpose is very clear, that is to stabilize the property sector. They don't like to see the sharp rise of the price or sharp coming down. That's not something they are pursuing here.
Well, I guess my real question is, you want to stabilize property market? Yes, but at what price? Professor Liang has talked about how there's some signs of price increase in the secondary market, but we're talking minuscule amounts of perhaps relative speculative changes in Shanghai and Guangzhou and the top cities. The prices in the other parts of China's real property market, where the bulk of Chinese citizens have put their wealth, have no signs of showing that kind of increase. So I think the key to restoring asset market a bubble and restore equilibrium is to have prices drop to where they will clear. And right now, prices, I don't think, have dropped enough to clear the markets in a way that allows people to be confident and say, okay, we are now having reasonably priced flats, reasonably priced property all over China, and now I can go and buy places where I think I will be living, because that's where the employment is. And that really is the key. People will go and buy property where there are jobs. And where the jobs are going to be is going to depend more on the overall economic policies in China for the new industries that are being developed, and where President Xi is focusing a lot of the development. So the property market cannot be divorced from the overall economic growth in different sectors of the Chinese economy. And right now, the lack of demand has really made the decision as to where the equilibrium price of the property market will be very difficult, because the question, my question from as an outsider is, where are the jobs going to be, and how much are the jobs going to pay, right? Those are the questions, the fundamental support for the property market. Having a 50 basis point reduction in your mortgage, to me, is totally irrelevant. When you have this kind of disequilibrium that you have in China right now, as we had in Japan and as we had in the United States.
Okay.